Okay, please go ahead.
Okay. Hi, it's Steve here. It's the second webinar I'm doing, and today I'm going to be looking at medium-term outlook on equities, and we're going to go through how I get to a trade idea for a medium-term call using technical analysis. So I'll start off with sharing my screen. A little bio on me. I went through it last time, but I'll just give you a bit of a rundown. I started trading back in 1987 on the Baltic Exchange on the commodity markets, and I moved over to the life markets, the financial futures, open outcry markets. Became involved with technical analysis there. Stayed there until about 1998, just before the market closed, and went on to electronic trading. Electronic traded for about 12 years before I joined Pia First, which is a technical analysis trade idea company. So we produce trade ideas on both short-term, medium-term asset classes of our FX, equities, fixed income, and commodities. We're also looking at doing individual stocks soon, so you can look out for them. And we provide this analysis for a number of major platforms and individuals and banks, hedge funds, etc. So our expertise is mainly in short-term day trade ideas, which is a lot more difficult maybe than a medium-term trade idea. But I'll go through that, and you know, I'll start off with showing you how I build up my trade idea to provide one on a medium-term basis. So let me just share my screen with you. Let me just bring my charts up. Right, so hopefully you can all see the this is the Dow actually. So I'm gonna jump back to DAX. So we're looking at the DAX now. If you can't see it, please do let me know. I'll try and get a chat up on another screen so that I can actually answer questions as we're going along. And yeah, and hopefully we can make it a little bit interactive as well, so that you can ask me questions as we go along. If I don't get around to it, I'll try and answer the questions at the end. If I do get around to it, I'll try and answer it as soon as you've got the question up, if it's relevant. Now let's bear with me for 1 second. I'm just trying to hook into the chat facility. No, I can't get that up at the moment. So yeah, I've got a chat there. If anyone wants to reply to me, let me know you can see it. Then I've got a link here. Hopefully you can see that. Right, this is the DAX. This is a line chart on the DAX. We look at the long-term chart to basically get an idea of what the trend is, because obviously from the intraday charts and the real intricate levels we look for on a daily basis, it's always good to know what the higher time frame levels are, because the most influential participants in the market are the longer term traders, the hedge funds, the pension funds. These are the guys that put trades on and affect the market due to the sheer volume of trades they do. And then it time frames. So, you know, the day traders and the scalpers use and on a daily basis. So although we see the markets move quite a lot on a daily basis, they're all affected by the longer term traders and funds and pensions and such like. So we look at the DAX chart, and we can see from the DAX chart, I'll draw in a few lines. I hadn't drawn any lines in because I wanted to sort of show you how I built it up from the start. Line charts are very good. This is a very obvious trend line, bullish trend line. So from 2011 onwards, you know, I normally go back 5 years at the most to get that sort of trend. And you can see this shows the closing points on a weekly basis. So this isn't to say that there wasn't a lower low created here, but the most important level from a technical analysis point of view is the close. The opens and close are very important. But the close is the most important. That is where, at the end of the day, the market participants were satisfied of the value. So buyers and sellers got involved during the day, but where it closes at the end of the day, that's quite significant. So the line chart shows the closes, so that gives us a good idea of what the trend has been. From 2011, we're in a bullish trend. The peak created here around April of this year, we've seen a pretty decent retracement. Now, if we sort of like want to break that down on the yearly basis, we can bring a little Fibonacci, which technical analysts use a lot, bring it back from this previous swing low, which was a significant low. It broke the previous two lows of 2013, 2014, formed a low here, and rallied in a very much an Elliott wave pattern, like a 5-wave pattern where you get 3 waves up, 2 waves retracement. And we can look at this and we can see, look for the significant pullbacks in this. And 61.8% and 78.6% are the ones we really look for. So here we got a low around about 78.6% retracement in September, and from there we had a reaction rally, a correction higher, which has stalled. Again, I'll whip this off and bring in Fibonacci again, and it's stalled around the 50% of the year's range. Quite a significant level again from a technical analysis point of view. So from this, we're still in the long-term uptrend. We've had a correction lower, a significant correction lower. It's based out around about previous highs, so it's, you know, and it's had a reaction higher from here. So again, with all these movements are happening in quite short time frames. So we like to break it down to get you know, a more medium-term trade idea, which would be medium-term in my world is more of a sort of, you know, more than a day's trade up to maybe a 2-week, 3-week, 4-week trade. The timing of your targets and your stop levels and everything can vary greatly. You can be looking at a medium-term trade idea which you could trigger and you could hit the first target within a few days, or it could take you a few weeks. So I'll look at the weekly chart. We've had this correction higher, it's stalled. So bring it down to the daily chart, we can look at the levels a bit closer. Now, I did have this is a chart that I've been using recently, and again, we can look at this this sell-off from April down to a low in August and a similar low in September. This created a double bottom. They're quite good chart patterns to follow. a double bottom, then also what it does give you, it gives you a target level. And the target level is gathered from taking the low of the double bottom, the peak in between the two lows, which was here, drawing a line from the lows to the peak, and then extending this on from when we actually break above the peak. So it's only a double bottom when it breaks above this peak. Before that, around this time, it wasn't a double bottom. Even here, it wasn't a double bottom. It only becomes a double bottom when it breaks above the peak. That gave a anticipated measured move target of 11,703. We also have on a daily chart a decent downtrend level. This is downtrend resistance. A trend line, you need at least 3 points in a trend line. You can draw a trend line with 2 points with an anticipated future point, but to confirm, a trend line is confirmed once 3 points are hit on that trend line. So here we are, we have the start, second point, third point, that's a trend line, and you see the significant sell-off from this trend line when it was confirmed. So we had the reaction higher here, and it stalled on this decent trend line we've had before. So now we've got 1, 2, 3, 4-ish, 4, 5 points where prices have rejected advances above here. This has nearly cancelled out this double bottom, basically. If once we break below this high here, I would say the double bottom target is no longer a target. We're looking for further downside. So we break this down again. We'll break this down to a 4-hourly chart to get maybe a medium-term idea and objective. So here we see again the double bottom there, the rejection. There'll be a trend line, obviously. I'll pop the trend line in so it will give you a bit more of a view. Trend line in there, and a rejection from here. Now, over the weekend, obviously, equity markets opened lower this morning, based around the tragedy in Paris. And markets have reacted from this gap open lower and have clawed back above Friday's close. So it's been a negative start to the day, and we're trading positive on the day now. But we're looking at medium-term trade idea. We're looking to remain short while we're below this trend level. So we're looking to be short in front of 11,000. Stop can be tight. If you look across at the horizontal gap here, there's a gap in the chart above. If we were to break above this trend line, close above this trend line, again, closing basis is far stronger and far more important than the tails created during the day. So a close above here would immediately target 11,260 to fill that gap. And then, but until then, we are selling into strength, selling into rallies, and we're looking to create a target for you on this. And again, we'd look at Fibonacci levels to look for a target. Immediate target would be a correction of this rally of at least 50% to 61.8%. You can see there'll be congestion and decent support around about this congestive area. So from a risk reward point of view, getting short around about the 10,750 level on today's trading, stop above 11,060. So you're looking at 300 point stop on a medium-term trade, and you're looking to target 10,180, 10,200 tonight to 10,000. So good risk reward there. That would be our medium-term outlook on that. Now we look at Footsie. I'll jump across to Footsie. As I say, if anyone wants to interject or ask any questions, please feel free. I've got the chat up, and I can see there's a few comments on it. Again, Footsie, I think a lot of people have always found Footsie seems to be a different animal to other equity markets. Obviously, you get the different areas, different regions have different growth and timings of growth. Obviously, the interest rate is the buzzword at the moment, where you have the US looking to raise rates, and you got Europe and the UK maybe looking. I mean, UK talking about raising rates in maybe 2 years. Germany talking about more QE. So it means that equity markets that are national to them countries will have a different time horizon as well. So we look at the weekly chart in the Footsie. It paints a different picture, obviously, to the DAX. I'll bring DAX up as a background. So here you see the DAX is in orange, and you can see that pretty much follows it on a relative basis. DAX was slightly maybe underperforming, but on a similar basis until the start of this year, when DAX has outperformed. So from that perspective, I mean, you can see even in the last few weeks the difference in the DAX, how the DAX has extended higher. This may not be the same if you put something like the stocks in there, but obviously the DAX had this quite aggressive sell-off. That was on the back of the VW scandal, and so it came back more in line with the Footsie, but it seems to have sort of pushed away. So it's either Footsie's weak, DAX is stronger, and that's how we're sitting at the moment. So there's Footsie's definitely underperforming on a relative basis. I'll get rid of the DAX, bring it in, and again maybe look to get a 5-year chart up. We've got 1, 2, 3, 4 significant lows there. This was the bullish trend line, and the week of August 17, very bearish week for Footsie. Prices broke below it and stayed low for a while, but have rebounded higher to back towards this trend line. This becomes a reverse trend line, and again prices have stalled there. They stalled around the 50% level, 64.46. So the 6,500 area is quite key in Footsie. We had last week's, this is almost a bearish engulfing, and this candle here prior to that is like a shooting star. It's where prices rally quite aggressively, but close the week quite close to where they've opened, forming a shooting star. Ideally, this shooting star candle would be above and be a significant high. It wasn't. It was 3 weeks into the peak, just below 6,500. But it still gives you an idea of the short-term sentiment being bearish and rallying and not being able to hold on to the gains. Confirmed by a bearish engulfing, where almost a bearish engulfing, where this week's candle formed a Marabuzzo candle, which is a candle which opens at a either a significant high, significant low, doesn't have any real tail of note, and closes at the opposite. So if it opens at a significant high and closes at a significant low, that's a Marabuzo candle. Now that candle in itself can give you a good level, which would be the 50% level. So a retracement back 50% of that candle would give significant resistance. So again, that you could be looking at what we got a low of 687, a high of 6,381. So you've got almost a 300-point range in there. Half of that, good at maths I am, is 150 points, we'll say. So 150 points above 6087. So 6230 to 6250 would be the area to sell. And if you look also, we'll draw a horizontal trend line in here at that level. You can see there's been significant highs and lows around there. And it does seem to sort of, it hasn't closed, it's opened around there a few times, hasn't closed around there at all. So, you know, the more significant resistance would be in this area, 640, 6400 to 6450 level. And down here, around about where we are now, the 6140 level. But then we'd be looking to sell into, again, we're the same, we're bearish medium term. This is a drive lower correction, looking for another drive lower, maybe an ABC formation. Let me try and get another line to show you what I mean by that. It's not working. Let me get rid of this. It's drawing. There we go. So this ABC correction would look to target 5169, that area. We could talk about exact levels, but I prefer to talk about areas because, you know, no one day is the same. Technical analysis is very good. It's a very good tool, but giving exact levels isn't a great idea, because you find that it's areas of support and resistance which bear more fruit. So that's what we're looking for. We're looking to get short. Our stop would be above 6,500. So any shorts built up, stop would be above 6,500. Again, even selling around these levels with a stop about above 6,500, giving you netting a 350 tick loss. The target on this trade is 51.30. So 51.30, 51.50, 5,200. You know, it's nearly 900 points. So it's, again, good risk reward on that basis. Right, we've done DAX, Footsie. I'll pop across to Dow now. Dow's obviously a very popular US one. Prior to this, I drew in this bullish channel. And again, it goes back to the closes. If we change the chart to a line chart, it sits in the channel lovely. You can see the lows, the peaks, the peaks, the peaks. And, you know, you could maybe even, if you wanted to show a really decent support trend line, this was broken quite clearly, along with all the other, you know, the world indices all broke around this time. And then when you change the chart to a candlestick chart, which are pretty good because they can give you patterns on their own, then you can see it paints a slightly different picture, but the general gist is the same. So again, we're in a corrective phase. US has seemed to outperform the UK. Again, let's maybe add foot there. And we can see it's performing better until recently, where you're seeing a real change of sentiment, where the Footsie has been under pressure. Dow's holding firm. It's been a pretty sideways for most of the year, this big breakdown around August time. The correction back failed to break above 18,000. Market's taking that as negative. Again, almost a bearish engulfing candle, questioning whether this rally is over. Again, it'll be confirmed on the basis of this week's market, where, you know, whether it's over or we are trying to break this 18,365 at the highs. So again, we're bearish on the Dow. You know, maybe not as much as the Footsie, probably on a similar basis to the DAX. So that's the weekly chart. Again, we want to look at closer levels. We'll drill down. We can see what the year's been like, and from a trading point of view, especially if you're a medium-term, long-term trader, it hasn't really set the world on fire. The break lower was a significant move over a few weeks. In fact, 1, 2, 3, the 5 days, 1 week in total, huge £2,000 drop on the Dow. From there, we've had a decent correction, and we're looking at whether this correction has got more in it or not. You've seen a lot of these sort of recent corrective move, the October-November plays. There's a question over whether they're forming a bearish head and shoulder formation. If it is, it's yet to be confirmed. You've got the left shoulder here, the head here. It has to form a right shoulder in before we start talking about that. But again, it's only a small formation because you base it on the previous trend. So if the previous trend's been bullish and you look for the bearish head and shoulders reversal, you're only really talking about back down to 16,000. It's not like if you look at this bigger formation. Maybe again, if you can picture it, you've got a possible head and shoulders here. The shoulder is the neckline is sloping downwards, but you've got the left shoulder, the head, and then a sharp right shoulder, and that's got a lot further to go if that it forms. But until these formations have actually formed, you just have to bear them in mind, because, you know, trading prior to the formation of a head and shoulders can be pretty expensive because they don't form correctly very often. When they do form correctly, they're really, really good signals. But there's plenty of times where they look like they're forming and then don't. And that's when it can cost you a lot of money. So again, we think this is corrective. I'm not convinced that it's a proper correction until we break 16,850, 880. So the low here, get a close below this level, then I'll be more inclined to start to set shorts. So I'm quite positive on this until we get a break below this level. So this sort of opens up an arbitrage type trade or a hedge type trade where I'd be looking to maybe set shorts in Footsie and set longs in the Dow. It's not as straightforward or as easy as that. You know, they're not exactly the same value levels. You've got to work it out on a percentage basis. But anyway, that's what I would be looking to do. So the Dow, I'm much more. I'll put a little fib in here just to give some idea of where we're looking to get in to enter. Let me bring it up to a 4-hour chart. I'm not getting enough information on the hour chart. You can see the low today. I'll point it out with a horizontal trend line. The low today was below these lows here. These lows and closes, we've broken back above it. So even if we drop it down to a, we'll move it to a line chart, gives you more of an idea. It looks like we made a significant low today, but on a close basis, it hasn't broken this congestive area around the middle of October. So still positive, looking to buy into dips, and would, as I say, drop it back to the candlestick. Would only really be bearish once it closed below this 16,850 to 950 level. So we look to set shorts, stop below 16,850. Sorry, set longs, stop below 16,850. And if we take this as a low here, we look at the retracements that we're looking for. And you're looking for, again, probably a retracement back to 17,500 to 17,600 and higher. We're looking on that, making its way back there. Again, it's I prefer to do the hedge trade, where I am buying Dow, selling Footsie. Yeah, that would be the areas where the significant medium-term areas we're looking at. I'll hop across to CAC 40. Again, a weekly chart. You can see how trend lines, how important they become. Again, let's jump onto because trend lines can be drawn differently as well when you take different information. When I'm taking the highs or the lows and draw a trend line, it can be quite different to drawing a trend line for the closes. So yeah, it's definitely important to look at these longer term time frames just to get a good idea of where the trend is. And look at this. This does paint a different picture again. The Footsie, the Footsie is definitely more in a bearish trend. Let's add Footsie in again to compare. And you can see the significant move back here, where now Footsie has been relative to CAC all the way until here, where it's closed lower. And there's definitely sort of like a sea change that's worth watching over the next few weeks, few months. But again, from a CAC perspective, we'll get some horizontal support from the previous closes on the weekly chart back here. And again, you can look at where the real sort of like shorter term play may be. The candlesticks paint a such different picture. This bearish engulfing from this week, and then we've got the lower open this morning, which is very quickly filled the gap and come back strongly. So again, a Marabuzo type scenario, but with the support we'll find the dip buying around here, this still paints a slightly more positive picture. This is what I think. This is why equities have become quite difficult over recent times, when you get the different disparities in the market, and it ends up in quite choppy price action. When you've had so many years of positive moves, you know, when it comes to the market turning, if it is turning, you get a lot of volatility, a lot of mixed and volatile price action. So again, this is the significant level from a short perspective is around the 5,000 level. From the dip buying perspective, you're looking at around about 4,250. Here you have where the trend line up here, which again comes in above 5,000. And we've got an even, if we want to look at shorter term price action, let's take these other ones out so it doesn't confuse you. It's almost a symmetrical triangle. Now the symmetrical triangle has formed after a rally, so it makes it a bullish symmetrical triangle. So we're either looking for it to break higher, breaking this trend line, or a failure would take it lower. So in the meantime, I'd be looking to trade the range in the CAC, the FRA 40 in this instance. I'll be looking to sell around about 5,000, buy around about 4,500, and a stop can be, so that's you're looking at a 500 point range. I'd continue to look to trade within that range until you get the break, and then whichever way that it breaks, go with it. So if we see a failure on this supporting trend line, we're looking for lower levels. We can project levels with Fibonacci very quickly and easily. 127.2 is a good one. 161.8 is the more popular one. As I said, this is a bullish symmetrical triangle. So the real one you're looking for, the more significant one, would be, sorry, I've just lost that line there. You'd either be looking for Fibonacci break higher, upwards of 6,000, but also you'd be looking for the triangle to extend. So that comes in around about the same level. It's a little, so not far away. 6213, 6350. So a break above here, close, a significant close above here. That's where you're looking for. In the meantime, I would trade the range. So let's hop back across the sea and look at the S&P. Again, a pretty significant bull trend. I'll break it down a line chart. Let's redraw it. Pretty solid trend, and that's again looking to support around about the lows of 2014. Sorry, not the lows, it's a significant low in 2014, around about the October low, and also the August this year's low. So from there you get support lines. So we'd be looking at this area probably into 2016 as a good supportive area. So bullish in S&Ps, or the US 500 as this is. And we see another formation here, again a double bottom formation. Not exactly obvious from the candlestick, the lower lows and the tails. But if you draw a line chart, it's a bit more obvious. Not much difference in the close. And we look to, again, draw from the low to the high of the peak. Once it breaks that peak high, there's your double bottom in place with the target of 21.05. It's quite nice. I didn't even plan that. So yeah, that's again a quick look at this. Almost immediately jumps out of you as a reverse head and shoulders, but still got a way to go before it plays out. We've got congestion support around this 2000 level. Obviously an aggressive open lower this morning, and it's rallied back quite quickly, but it's going to run into headwinds from the sell-off we've seen in November so far. But again, I think with the S&P, we're pretty much positive, remain positive until we see a break of the 1990 support. So, and then break of 1990, we'd be looking to target the lows of this September 29th. Prior to that, we'd be looking to buy dips. So buying in front of 1990, very tight stop, and looking for a correction higher. Again, we're looking for a 61.8 to 78.6 correction, which again would bring these significant highs and lows, congestion basically, looking back, congestion level, around about this area, 2075 to 2090. So setting longs around about 2030, you've got stop at 1990, it's a 40 tick stop. You need to be looking to have at least a positive risk reward ratio. So if you're losing a point, you want to be making at least a point. You're losing 100 points, you want to be making at least 100 points. Ideally, you look for a little bit more. Obviously, the more you look for, that if you're looking for 2 or 3 to 1, that's a good level to look for. I do believe that it's not really the best way of trading is not necessarily to have a high percentage of winners to losers. If you're winning more than losing, that always sounds good. But if you're losing trades are 20 points and you're winning trades are 2 or 3 points, very soon you'll realize that that doesn't work. Even like ratios of 4 winners to 6 losers can work very well if your risk reward is solid and you stick to your plan every time. Again, breaking down onto the hourly chart and S&Ps, you can see this. The hourly candles are pretty positive at the moment. They look like they can quite easily move higher. So positive on that. It's 12:15. Has anyone got any questions they'd like to ask, or is there any other markets, preferably equities? I'm trying to stick to the equity thread this week. Maybe a fortnight's time, I'll be back on. I'll be going into commodities and a bit of fixed income. But yeah, I'm quite happy for anyone to suggest something that there is close to them or is something that they want to look at right now. If not, I will bring a copy view. I can have a quick look at your stocks. Again, line chart, weekly chart, pretty significant rally over the last 5 years. Also, at the same time, the one formation that really jumps out to me, again, which I've explained, is in the process of forming, so I'm not going to get carried away yet, is a bearish head and shoulders formation, where we see shoulder, head, shoulder. Neckline, definitely something to watch out for. This is on a weekly chart, so it's a weekly close, so it'd be a medium-term trade if the market was to close below this neckline. Still got a way to go, quite a few hundred points, so just keep that in the background. See, Nana's asked about DAS. Do you mean DAX? I've covered DAX already, but I'll briefly hop over it if no one else has got any other suggestions or anything that they want me to have a quick look at. This is a pretty good system Saxo trader. It's thousands and thousands of different assets in it. Yeah, no, I'll go over I mean, Eurostoxx obviously is predominantly German based. So this would be a similar thing to what we're looking at, but I will briefly go over this before we go DAX. So I'll give you a measured move target on this would be back to the 2012 area, if that was to close on a weekly basis below the neckline. Here we had, if we look back on the daily chart, we had a double bottom. He had a double bottom and a measured move target all the way up here. It's failed just below 3,500 and come back. I like Ichimoku cloud. Gives you a good visual picture of future resistance and support. And you can see today we opened lower aggressively, and it's found support around the cloud area. Obviously back from these levels, and it's reacted higher. So at the moment, the reaction higher, we'd be on a daily basis, we were looking to sell into it, but it's carried on going. So I'll quickly jump back to DAX, and this is what we came up with. We talked about the long-term trend higher, significant peak this year. We've revisited this year's lows, and we've reacted higher. So we think we're in a corrective phase where the 50% level around about 11,000 is going to be significant. We looked at the downtrend line, which has had now 4 points of interest on that downtrend line. We looked at the double bottom, which is similar to the Eurostoxx double bottom of here, and we saw the capping of gains 11,060. Where is it? 11,058.9. So 11,060, 11,060. Bit of a line in the sand for bears at the moment. So we're looking to set shorts in front of this level, looking for prices to move lower. 4-hour chart, again, we looked at areas that we may be targeting, and they're around about the 9,975 level. And I think we drill down to the half-hour chart. So on a medium-term basis, we're looking to set shorts. Stop would be a weekly close above the 11,060 level. Or if you're trading more on a shorter-term basis, we'd continue to just sell into rallies, keeping it quite tight, looking for more of a correction back down to test these levels eventually. Once a break of here, 11,060 level should target 11,700, and you know that could be into next year. So that's our medium-term view. If there's any other markets that people would like to look at, let me know. Quickly again, go over the Footsie. Bearish on the Footsie more than anything really on the equity side. Footsie seems to be a different animal. The Dow, again, Dow is a bit more positive. So the US have still got a little way to go before we turn bearish on those. In the meantime, we're mildly bullish. Same as the S&P, which you see still entrenched in this long-term uptrend. And the Euro stocks we've just done. So that pretty much shows you our medium-term view in equities, and you know, happy to take any questions. Could look at NASDAQ. Oh. Let's get rid of all. Weekly chart in oil. Sorry, weekly chart in. Look at NAS, aren't we? Didn't look quite right. NASDAQ again. Let's take a line chart. Again, pretty significant uptrend. 1, 2, 3, 4, almost 5. Almost expanding type pattern. And you can see the dot-com bubble. So it's a pretty significant high we've made recently in NASDAQ. I mean, that's a line which goes back almost 15 years and seem to find a significant top there. Just looking at a couple of questions. Do you trade particular stocks? No, we can analyze anything. Analysis from a technical analysis point of view is similar to whatever you have put in front of you. You have a chart on anything, we can analyze it. The ideas are the same and the theory behind it's the same. I see Jax has asked about silver, which I will be going over silver, not next week, the week after. I'll give a, can't help being a nice guy. You can look at my gold chart as well. Let me just bring a silver chart up very quickly. Yeah, like I say, we can do individual stocks. It's everything. It's all the same as far as we're concerned. I've got a few minutes left. I'll quickly run over silver and see. It's a little bit different to the equities, but interesting nevertheless. Obviously, under pressure. All commodities, gold, silver, very under pressure. The biggest consumer, China, obviously. The slowdown going on over there, and a bit of worry over these mining products, and you are seeing significant levels here. Straight away, we can see a descending triangle, which isn't good news for silver longs. Also, you could call this a possible head and shoulders top. That's on a weekly chart. Let's drag it down a little bit. Get the daily chart on there. And you see almost, I think it's 12 days, 12 negative days. 1, 2, 3, 4, 5, 6. 12 negative days. This sell-off is stalling. You get chart patterns. These are dojis, where it opens and closes at the same level, and you get a decent range. So a decent high, decent low. But at the end of the day, the close is the most important thing, and that is saying you've got buyers and sellers are equal, and you've had two or three of those, not quite dojis, these two either side, but they're still saying the same thing, painting the same picture. You've got significant support from the August lows around about $14. I think this is due a correction. This would line up maybe with a significant sell-off in stocks. So looking for levels, I'd be quite happy to start to dip buy around here, although we've had 12 days of negative price action. Today is a little bit more positive. Again, it's due a correction. This is a significant drive lower. Any sort of correction, you know, this market, although we'd say in the medium term that this is bearish, you could have a decent correction of 61.8%, which is like $1.50. Sorry, $1.50 from the lows down here, but it's like $1.15, and we'd still be saying this is bearish. You know, anything, it's got to get up and put pressure on these highs up here before we're back in the bull camp. So let me take that up. It looks a bit confusing with too many lines on. So I'll be looking to buy into dips above 14.90, tight stop below it, close below 14.90, be cutting longs, and just on a momentum slowing down. Let's get a momentum up there. So you see the momentum's stalling slightly around here, still in a downtrend. So still room for it to carry on, but my instinct tells me that there's maybe 14.17 low, 14.16 low, dip buying taking place. So look to buy into dips around here, around about 14.25 to 14.30, even 14.35, stop at 13.90. So you've got a 45 tick stop. You've got to be looking for a pullback, maybe above $15 towards 15.50. So yeah, I think it's due. I think it is due a rally, but I'd keep the stock pretty tight on that. You know, you look further back or take it out weekly chart. I know we're at significant lows, but the market has obviously been a lot lower in the past, even only back 6 years. So no reason why it breaks this significant low. It can't continue. But in the meantime, shorter term, medium term basis, buying into dips, stock below 13.90, targets $15 to $15.50. Okay, guys, I think that's my time up. I hope you've enjoyed it today. And I look forward to going into commodities and maybe fixed income in a couple of weeks, in a fortnight's time. Nice to speak to you. Thanks.